Dear students, in the previous lecture, we have discussed the format of the income statement, or simply the format of the profit and loss statement. So here we will discuss in a little bit detail, or we will take as some specific insights that what is the meaning of all these things and why this format is there. First of all, the purpose of the income statement or the profit and loss statement, we want to know that how much is the income of the business, or there's any loss of the business during that specific period. So income statement is prepared for some specific period. It may be normally for the 1 year, or even they can prepare it for the 6 months or 3 months, or even on the daily basis, but normally the financial period is for 1 year. Now, 2 or 3 basic things that we have to consider. First thing that we are writing here, the net sales. Net sales means what? The net revenue means what? For example, we have a business, a small business or the big business. What is happening? That they are selling the goods to the customer, and due to some error, maybe due to some mistake, or maybe due to some quality issue, the customers are returning the goods. The quality is not good, so what will happen? Customer will return the goods. So if there's any return good is there, so what will happen? It will reduce the sale, it will reduce the revenue. We assume that the company has a total sale of 300,000, but almost $5,000 amount the customer has returned. It means the business has a sale of 300,000, but the value or the worth goods of 5,000 the customers have returned. It means the net amount which they are receiving is only 295,000. So it is not 300,000. The sale is 300,000, but out of that, some of the customers, they have returned the goods. So they received the money and now they are giving it back to the customer. So it means the net amount what the business is receiving in the form of the revenue is only 295,000. The next thing that is very, very important, we have 2 portions here. First is related to the cost, and the second one is related to the expenses. Now the cost of the goods, the business is a trading business. They are purchasing the goods and they are selling the goods. So first we have to consider that what is the cost of the goods which they are selling. For example, it may be a shoes business, it may be a clothing business, it may be any like some garment business. So what they have to do, they have to consider that what the goods they are purchasing and what is the cost of that purchases. Let's say that they have some bookshop, or they have some shoes business, or they have some car business, or any other business where they are purchasing the goods and they are selling the goods. Let's say we assume that they are purchasing some garments and they are selling the garments. Now, for the garment business, what they have to do, they have to purchase some of the goods. So here we have 2 things, the concept of the opening stock and the concept of the closing stock. So first of all, what is purchases, or what is the goods purchases? Any stock or anything which they are buying, means the business is buying what? It's a garment business. So they are buying what? They are buying the garments. And the same garments they are selling to the customers. Now in that case, what happens when the year is ending? There is some stock which is unsold. So that stock will be called as what? As the closing stock or closing inventory. Now the year is ending. It doesn't mean that this amount they will not use in the next year. The same stock they will use in the next year, the closing stock which was unsold at the end of the year. So that is the opening stock for the next year. So we have assumed that they have an opening stock of $36,000. So that amount or that stock was available with them at the start of the year, which was available from the previous years. So $36,000 is available. Now they have some purchases. So again they have a stock, but still they need more stock. So they have purchased almost $60,000 more stock. Mean there may be some new designs, or there may be some other requirements. So they are buying the new stock also. So they bought a value of 60,000, the worth goods of 60,000. Now there is a concept of the carriage. What is meaning of the carriage? Carriage means that when they are buying the stock, obviously it may be from other city, or it may be some time from the other country. So they have to pay some of the carriage or the freight or the transport. So this is what? This is the carriage or the freight or the transport. So they have to pay almost $5,000 for the carriage or for the freight. So the originally the garments was for 60,000, but they have paid $5,000 for what? For the freight or for the carriage or for the transportation. So this is adding the value. It is adding the cost. So 60,000 stock is there which they have purchased, plus 5,000 is the cost on the purchases as a carriage, but there is $10,000 value which is returned. Just like a sale return, we have a purchase return. Means if there is some fault, if the quality issue is there or any other reason is there, so what will happen? They will return the goods to the supplier. So they have returned the value 10,000. So 10,000 valued good are returned to the supplier. So 60,000 they have purchased during the year. 5,000 is the cost of the freight or the cost of the transportation. Plus we have that one. Then there is a 10,000 amount which they have returned to the suppliers. So the net purchases, or what we say the total purchase value, is only 55,000. So this is the good which they have purchased of 55,000. Plus at the start of the year they had a value unsold stock from the previous year 36,000. So now 36,000 from the previous year, 55,000 in the current period which they have purchased. So the total goods or the total stock which is available which they can sell is how much? Is 91,000. Now again at the end of this year, when this year is ending on 31st December, they counted the inventory, they valued the inventory, and they know that the value is how much? 31,000. So it means this is the closing stock of this year. So 31,000 if it is available, it means out of 91,000 which was the total goods available, 31 is there with them. It means the total cost of those goods which are sold is only 60,000. So we have deducted that one. So opening stock is added, purchases are added, and closing stock is deducted. So in a simple words, $36,000 value goods were available. They bought more, 55,000. Still available with them is 91,000 total available for the sale. So at the end of the year 31 is available. So it means 60,000 worth goods are sold. So that is put here as the cost of goods sold. So now 295,000 was the total revenue from the customers. 60,000 they have cost of that sales. Means those garments which they have sold for 295,000, the cost of those garments is 60,000. So it means they have a profit. That is 235,000. But this is not the net profit, because they have so many other expenses are there, which are called as the other expenses, or what we say the operating expenses. What may be, for example, they have a garment shop. What will happen? They have to pay the salaries to their workers, to salaries to their employees. They have to pay the rent of the shop. They have to pay the insurance. They have to pay the carriage on the sales, because sometimes they have to deliver the goods to the customers. Sometimes they have to receive the money from their customers, but they are not paying, so the bad debt is there. They have some assets like a furniture is there, some equipment is there, or even the vehicles are there, so depreciation is there. So there are so many. This is just an example, 5-6 expenses are there, but there may be hundreds of different expenses just to sell the product. They have to pay for the advertisement, they have to pay for the utilities, they have to pay for the electricity, they have to pay for fuel, for transportation, for their workers, for their insurance. So many expenses are there. So the total expenses are here 50,000. So they have 235,000 as what? As their profit. But that profit is not the net profit. This is the gross profit. Mean there are so many other expenses still they have to bear. So they have to bear 50,000 as the expenses. Plus there is some other income. Their main source is what? That they are selling the garments. But there are some other sources are there. For example, just two things. They have deposited some of the money in the bank, and the bank is giving them the interest. So that amount is considered as the income for them. Why we are not writing it here as a revenue, as a sale? Because this is not the main source. Their main source is from the sale of the government, but they are getting 14,000 as the interest. Then there is some discount which they are receiving due to the early payment. We have discussed already in the previous lectures what is the discount expense, so how it is calculated, it was also done. So for $1,000 they have received the discount. This is other income also. There may be some rent they are receiving, there is some like a dividend they are receiving from the investment or any other source. They are selling some of the scrap, so they are receiving some money. So from all this they are receiving almost 15,000. So they have expenses of 50,000, 15,000 they are getting from the other resources. So it means during that period almost 20,000 is what their net profit or the net income. So this is the concept that how we are calculating the cost of goods sold. And here we have the concept, we have a gross profit and we have a net profit. Then we have other expenses and we have other income and also the cost of goods sold. And we have discussed the cost of goods sold in much detail. So these are the main things that are included in the cost of goods sold. So garment business is there, they are purchasing the garments, selling the garments, they are receiving the total sales of 295, but their gross profit is 235 and their net profit is almost 200,000. So this is the net income or the profit for the current period. So this is the concept how we are considering the income statement or what we call the profit or loss statement. I hope you have understood the concept, and still if there is any doubt, any question, you can ask me in the comments. Thank you very much.